Many times for investors, the industry you invest in matters more than the stock you invest in. And for that reason, I've categorized industries and ranked them according to my favorites, the best industries and the worst industries to invest in. And those of you that have been following my channel understand that, the electric vehicle industry and the airline industry are two of my least favorite industries to invest in. And if you look back over the previous 5 years, let's say in 3 years, and you evaluate all of the electric vehicle stocks, including Tesla, Rivian, Lucid, NIO, ChargePoint, all of those, anything related to electric vehicles, and you look back those 3 and 5 year periods, you'll realize that most of those investments have done extremely poorly. And it's mostly because of the industry and not because of stock specific factors. The airline industry is similar, and you can go back even further because you have more history with the airline industry. Some industries, because of their structure, are just unattractive for investors. And it can be very complex, very high tech industries that are still unattractive. And then you can have very mundane, very low tech industries such as beverages that have been attractive to investors. Pepsi, Coca Cola have been attractive for investors. The home improvement industry has been attractive for investors. So, cybersecurity is one of my favorite industries, and I think it's going to be and looks to be one of the more attractive industries looking forward. And in this video, I'm going to highlight three cybersecurity stocks, three of my favorite cybersecurity stocks you can buy right now at current market prices.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so according to McKinsey and Company, the current available commercial solutions for cybersecurity do not fully meet customer demands in terms of automation, pricing, services, and other capabilities. So, as a result, today there's a gap between the $150 billion that is spent on cybersecurity and the actual total addressable market, which, according to McKinsey, could be a staggering $1.5 trillion to $2 trillion. And if you've had experience with cybersecurity, which if you've worked at any company, you probably have experience with cybersecurity, you'll understand how they are not meeting customer needs, right? I haven't yet experienced a cybersecurity provider that works well. In fact, I've often felt that cybersecurity companies do a better job of keeping out uh, honest users or users that are should be granted permission to the whatever it is that we're looking for permission into. They do a better job of keeping us out of the system than they do of blocking those that are trying to harm the system. Many times, especially with my university, sometimes I want to log into the account and maybe respond to a student email, but I know I'm going to have to go through 5 or 6 login steps, going through all the cybersecurity to respond to one email. And I might say, you know what? I won't do this right now. I'll wait to batch them all together to have 5 or 10 student emails to respond to. And so I won't log in and I won't respond to that. I won't respond to that student email. Whereas if there wasn't that strong cybersecurity with like 3 step process, I would have sent that student an email response within a few minutes of their email, right? So, and that happens so many times where I do not log into the system because I know I have to go through all of these steps and the actual thing I'm going to do is not going to take that long. And so I just wait and batch it, wait till there's a bigger batch available so that if I'm going to log into the system, I have at least a few things to do and not just one thing. And so that's just one example of how the current cybersecurity available is not meeting customer needs. And if they were to meet those customer needs, I'm sure customers would be willing to pay a higher price if those needs were better met. And even without that, the industry is forecast to grow substantially. But as they develop newer and better technology, it can unlock this bigger market opportunity because cybersecurity is becoming more and more a need, rather, it's becoming more and more a necessity rather than a nice to have. So, the three cybersecurity stocks I'm going to recommend here are Fortinet, SentinelOne, and Zscaler. And these three I've picked out specifically for the combination of factors, including revenue growth, cash flow improvement, return on investor capital improvement, and valuation. And there are more cybersecurity stocks I could have recommended as a buy, but I selected these three for this specific video. Now you could see revenue growth has been excellent. Fortinet has increased its revenue at a compounded annual growth rate of 22% between 2019 and 2025 to reach 6.1 billion. It's the biggest of these three I'm highlighting here in terms of total revenue. And then you have Zscaler, which has grown its revenue by a compounded annual growth rate of 50% in that time. And then you have SentinelOne that has grown its revenue at a compounded annual rate of 75% in that time. So robust revenue growth for each of these three companies. Then they've also done a great job of improving their profitability when measured by the operating cash flow to sales. Fortinet and Zscaler already have phenomenal cash flow from operations to sales numbers at 37.3%. And those are significantly higher than where they were 5-10 years ago. And then you have SentinelOne, which is making very speedy progress in improving its operating cash flow to sales, improving from negative 96% up to 5.1%. And I wouldn't be surprised if these numbers continue rising and approaching those north of 30% numbers as are regular for many cybersecurity companies, including 2 out of the 3 I mentioned here. Returns on investor capital are also very good and improving for these three cybersecurity companies, with Fortinet leading the way at 23%, much better than the 3% it reported in 2016. And they're all showing considerable improvement as the companies invest in the technology to begin with, and then further investments in the technology are nowhere near the level of initially ramping up and getting the product ready for sale. And finally, valuation is relatively attractive for these three cybersecurity companies. When measuring on a forward price to earnings basis, they're all trading at reasonable valuations given their phenomenal growth rates in revenue and improvements in cash flow and improvements in returns on investor capital. The most expensive here is Zscaler with a forward price to earnings of 87, but you also notice that Zscaler had a compounded annual growth rate of 50% and operating cash flow to sales number that matches Fortinet. So it has a much faster revenue growth rate than Fortinet, more than twice the speed, and generating the same amounts of operating cash flow to sales. And at the same time, the returns on invested capital are improving, so it deserves that premium valuation. And then SentinelOne is trading at a forward price to earnings of 76. It's actually growing revenue at a compounded annual growth rate that almost exceeds its forward price to earnings ratio at 74.5%. So that kind of revenue growth with improving OCF to sales and improving ROIC deserves that premium valuation. And then finally, Fortinet at a forward PE of 40. Fortinet has already reached very large scale in terms of comparing cybersecurity companies, generating great ROIC, great OCF to sales numbers, and revenue is still increasing on a compounded annual growth rate north of 20%. Furthermore, when I calculated the discounted cash flow valuation models for these companies, they looked either fairly valued or undervalued. For SentinelOne, it looks significantly undervalued. The current market price is $18. The intrinsic value per share I calculated is $42.48. By the way, I'm getting all of these numbers from finchat.io, and all of the charts that you saw earlier I was getting from finchat.io. There's a link in the description for a free 2-week trial if you use that link in my description. So Zscaler also, I calculated the intrinsic value per share at $299. Current market price is actually $299. This business I see as being fairly valued according to my discounted cash flow valuation. But again, excellent business metrics and a great expansion in the total addressable market of the industry. So I still would recommend this stock as a buy. And finally, Fortinet, the intrinsic value per share I calculated is $95. Current market price is $102. I apply a margin of safety in these situations. And even if it's a few dollars over the intrinsic value, I would say this is a fairly priced business according to my DCF. And then looking at the performance of the business, it deserves this. And I would be happy to pay a fair price for this excellent business. So, cybersecurity, one of my favorite industries looking ahead right now and looking back, it has performed excellently. These are three excellent cybersecurity stocks that I think are a great investment at current market prices. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.